All right, traders, welcome to today's recap. This is Christian Farmer. It's Tropic Trade Group, and it is Thursday, April 20th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. Talking fast because I am going to a hockey game tonight. Rangers Devils at, they used to call it the Meadowlands. It's not the Meadowlands anymore. It's Newark. But yeah, look forward to, I'm taking my nephew to go to the game, so really excited. 7:30 start, and should be a great game. There's been some great playoff series so far. So I could talk for a while about sports, but this is a market video, so I will get right down to it. Theme of the day: the range continues. Really, at this point, I think frustrating a lot of traders, probably myself included. It's not easy to kind of deal with a market that just continues to kind of flip on a dime. Now today, of course, we knew that we were going to have like 7 Fed speakers, so that is also a little bit of a warning when that happens. But it didn't really seem like the Fed speakers said anything new. I think that there were some other things on the tape. So I was messing around earlier. I sent out a tweet of like the I don't know, the cartoon character like running through a minefield. So that's kind of what it feels like there's a lot going on right now, right? Besides all the Fed speakers that we had today, which is just one particular thing, but it is options expiration this week. And then we're in the middle of earnings season. Earnings season, from what I usually remember, it's not the case every single time, but a lot of times we do trade in a tight range during earnings season. Why is that? It's because we're getting a lot of new information, right? There's a lot of different digestion of moves. You'll see one name move one way pre-market, and then by the end of the day it could reverse a loss of down 2% to up 2%, and vice versa. A name could be up pre-market, and by the end of the day it's down, right? So there's a lot of that like jostling of trying to figure out what names really are positioned well for the future, what names are not, right? And Tesla was one name, that of course is a big name in terms of market cap, right? And it's a big name in some of the indices and sector ETFs too. So it's a big deal when one of these names really does not have a good earnings quarter. So that is, that's one of the factors for today. Then we can kind of add into today too. There was a rumor. I don't think that there's any truth to it, but you never know with rumors, right? There was some rumor that was being spread around that like Russia's getting ready to attack the British, right? And it shows like a picture of a ship, right? I think it was the Telegraph where that came from. Again, I'm not saying anything about that rumor being true, but a lot of times like those rumors happen all the time and there's not any truth to them. However, they unsettle the market, right? Another thing too that we're getting closer to, and we have no resolution, is the debt ceiling, right? And I think that's freaking people out too. Nobody wants to see a default. That will not happen. It's not that it won't happen. It could happen, right? But that won't be good for the market, right? That just adds a whole nother layer of uncertainty and negativeness to the market. So I'm giving you all these reasons, and it kind of sounds like excuses for the market, for why the market's not doing anything. I'm not trying to give the market excuses. I'm just trying to say, hey, this is what we're getting with all these things going on. Take a look at the S&P for the day, right? Again, just, there were some levels that we ran into. So again, you could think that, oh, geez, there must be some headline, but it's also a little bit of the technicals too that are going on here too. We had a nice little rally here and into the bottom of value, and we got rejected there, right? So there's a decision area. So at each one of these, I'm going to go through a couple different time frames, because they really help me with using the indices. Because right now, as soon as we're hitting a little bit of resistance, it's being rejected, right? So this is for the S&P. Again, that was the bottom of value. The Qs, which I traded in the morning, and I kind of got fooled by this a little bit, but I bought the open, and I sold right here, and we kind of sat back in here, and then we ripped to the upside. Right. So notice where we got to, basically yesterday's highs. Now, again, I don't have an explanation for this, and I wasn't thinking that this was going to take place. But again, none of us have a crystal ball, right, and know what's going to happen. But so here we are with the Qs. Notice where we got rejected again, right at the top of value. So that the highs of the day, which coincide with yesterday's highs, right in here, are just showing you like where we're getting rejected, and that continues to be at 318.79. So I'm getting a lot of questions from my members about this, about, geez, I'm not making a ton of money in this market, like what can I do? Right, the only thing that you can really do is be patient. There's not a lot that you could really do to to try to make up for so far that the market has been trading in a range, right? Basically, you just have to be patient and kind of let this work its way, right? There was a couple questions that I get in. They're all good questions about like hedging. So, well, hedging is to basically to reduce your exposure. If you're trying to kind of fade the market, right, that's different. That's a strategy of speculation. Now you could adopt, there's nothing wrong with that, but it's not hedging, right? Now you could hedge your day's gains, by speculating and going, as soon as the market goes up or hits the first level of resistance, you could certainly go the other way, right? But that's speculation on market direction, right? So people confuse these two terms a lot, right? All hedging is to do, right? No one really wants to make money on their hedges, right? Hedging is just to reduce market exposure. But I guess you could kind of add that maybe actively hedging, in here to say, hey, the market's up a tiny bit. I'm going to sell, and minimize my risk. You could, of course, do that. The danger of that, you have to look at both sides of the coin. Like if you're going to put so first of all, hindsight 2020, has that strategy worked over the last 2 weeks? Every time the market goes up or hits a little bit of resistance, you sell, right? Or you go the other way and you short something. Sure, that has worked really well. But I could tell you eventually, right? Let's back this up now and let's look at the cues on the daily chart. Right, eventually we're not going to go sideways forever, right? So eventually that strategy is not going to work. In fact, it's going to hurt a lot of people once we actually break out of the range. Can I tell you when we're going to break out of this range that we've been in? Now it's the 20th of the month and we're sitting right at this virgin point of control that we took out at the end of March? No, I can't tell you that, right? And no one has a crystal ball, right? And that's why we kind of pay attention to some of the under the radar things like what breadth is doing, right? I was reading Helene Meisler's column this morning that she puts out, and she was talking about that the 20-day new highs have not been expanding, right? That's something that when we are seeing strong breadth and a possible hint of a direction, like let's say resolving higher, you want to see like those new highs start to expand. And right now we're not seeing that. We're seeing them basically contracting a bit, so which makes you kind of think, hey, try to be a little bit more defensive, and be nimble in this market. But I always say the same things, and it's tough for people to really get a handle on these things, unless they're kind of experiencing it. But the smaller position size and leaving yourself room to kind of, to scale in and scale out, these are things like it's like a broken record how many times I've said this, but if you're going all in, if you're putting your maximum position size on, right, at one particular time, odds are you're going to get hurt a little bit, right? Because if you're buying a little bit of strength right now in this market, right, a lot of times that strength is getting faded pretty quickly. All right, so that's kind of a quick summary about like what's going on in this market. Geez, I'm sorry for the shadows, but it's that time of the day, and I left the shades up over here, so you can kind of see we got the sun over here. But yeah, I mean, hang in there, right? I mean, this has been a I was talking to somebody too about how this is like I was saying 2 steps forward in this market and 1 3/4 steps back. It's actually 2 steps forward and 2 steps back. Here's my trading blotter, just so that you can kind of see what I'm going through. But I got stopped out in 2 trades today, right? Again, I always talk about the losing trades first, right? We all have them. I know people don't want to share that on Twitter, but for confidence reasons or for ego. But if you've been a trader for a while, you know how these things work. But yeah, I got stopped out in Exxon, right? I mean, Exxon. So here's a good example. Like, we're just talking about how the Qs are in this tight range. Take a look at Exxon. We saw a bunch of call buying. It hit my stop right at 114, which was the lower range, and I got out of the trade. Unfortunately, the names, the names snap back. So I'll pay attention to this one, but it's tricky, right? Because once a name sometimes breaks its range, sometimes it keeps going. Right now, we're not in that situation either. We're not seeing like a breakdown in the market. We're just basically trading in this tight range, and both the high end and the low end are getting rejected. I also got, I put on probably a little bit too tight of a stop in First Solar, but that's okay. First Solar is going to report next week. If it doesn't work right off the bat, sometimes it's better just to give up on the trade, right? But I would be watching this. A lot of times I get into trades and sometimes it's just a little bit too early, right? And sometimes, again, keep in mind, no one has a crystal ball, right? The trend may look really good in a name, but sometimes you just got to be patient, right? And it helps to be, like I could have been a little bit smaller in position size too, to kind of handle some of the bumps and put in a wider stop in this market, right? But there's 2 of my trades, and you look at First Solar, right? There's nothing wrong with this chart, other than it didn't break out on the first attempt, right? But I think that I think this is one to keep an eye on. What did work for me is a couple, some housing stocks. Now I did take this name off today because I'm not going to let a green trade go red. Home Depot was a name that I put on earlier, and again, like it got rejected where it needs to. So Home Depot is usually a slower moving name. We had good results from DR Horton. So, that was the catalyst for the housing stocks today, even though they've been really strong. But I will wait for this to break the 200-day moving average. Costco was another name that I was looking at, right? And I put this on Twitter, right, when it was a full green bar. And I said, just be careful, because what happens is people get excited about these names. And if you don't have something that accounts, like the market webs, for volume at price, right, you could see this is every time this hits one of these red lines in the last few months, it's been the kiss of death, right? So up here, and I'm not saying that this happens here, but I'm cautious when we take out one of these. Also, we took out one of these on the 1 hour chart too. And I even said, I think the chart that I posted earlier was before this wasn't even taken out. But what I wouldn't watch now, because I'm a fan of this stock, I don't hold any in my trading account, but I'm a fan of Costco and what they do, and the business. I think they're a great business, but I will let the technicals favor it first, right? You could see another one back here being taken out, right? Perfect. Boom. That's where you take profits, right? And again, that was from this this value area back here on the 1 hour chart, right? So you can see how well these things work, right? So again, I mean, notice, right? So again, I didn't trade this one at all today. I was just watching. I thought by the time it moved, I'm like, there's no way I'm going to add a position when there's a VPOC right in front of it. All right, so I would wait for a move above this this 510 level, right? And that's something to kind of keep in mind, because if it can get above the 510 level, right, then it's got some open field in front of it, right? That next version point of control that I see, right, which I just had, is not up till 550, right? So that would be a great trade if it can manage to kind of clear this particular level. All right, so I mentioned the housing stocks were strong today. A couple other things. I'm still holding this Palo Alto. It did come into the bottom of value, right? And so this is potentially what's working better right now, is to play these bottom of, where there's support, rather than trying to play the breakout. Some breakouts are working, right? But they're few and far between. Right. And so this is what I would be watching to see if this holds the 191 level. in Palo Alto, right? And then again, I'm not necessarily looking for this thing to go to blast off here, but maybe 204 would be the upside target. What else? I mentioned I did hit one target. It's just a starter position in Home Depot, so not that big of a deal. I did force a target there at 360, right? And then I took the rest off in Home Depot, a little bit south of my cost basis. Rambus, same thing. I added yesterday, right? This name, man, that's an ugly candle. But again, I'm playing by the rules. I added into support yesterday. We go to the 1 hour chart, right? And I took my profits right at the top of value, which again was also, just like the Qs, completely rejected there at the top of value. So this market just does not have the power for most names to kind of break through that. So what do? Right? You can add a little bit into the weakness, right? Here is my, here is my ad at 49.10. Again, we're not talking about a huge amount of money here. I'm just taking what the market is giving me, right? And taking a target at 50.90, which was even a little bit. I even got a little greedy there because it only got up to 51 and then got rejected, right? I also tried a little bit of Arista Networks today. Also, that name kind of coming into support, but again, if it goes underneath my cost basis on a new trade, I'm going to take it off. This market's just too hard right now. So again, that's the main thing again, to take away from this right now, right? You have to recognize what kind of market we're in, right? Again, if you think that you're going, I was on a great podcast yesterday with Anthony Crudell, and we were talking about, he mentioned, this was one of his questions, and he was talking about how new traders expect to make the same amount of money every day, right? That is the worst thing. Like, those commercials that you see with like young traders, and they're like, hey, if you make $500 a day in trading and you annualize that and you compound that, right? That sounds like a great theory, but in practice, that's not the way it works, right? For example, the market was really moving towards the end of March, right? We had some movement in the market. I'll go back to the Qs here just for a second. All right, we had this really nice movement that happened towards the in the second half of the month, right? But since then, that's not that's not reasonable to think that you're going to make the same amount of money that you did in this particular situation. So be patient. Better times will come, even if we kind of come in. I said this earlier in the week, but that's not happening either. But even if we kind of come in and shake everybody out a little bit, and have a big down day, right? That might actually help with this sentiment, because one thing I'm realizing is as soon as we get an up day, everybody, including myself, starts putting together all types of trade setups and saying, oh, the charts, these things look great. And then the next day, what happens, right? There's no follow through. And then everybody gets really bearish, right? And doesn't post any charts. And the next day the market goes up, right? So, it's important to kind of stay in the middle, not go out on Twitter and say, oh, I'm seeing all these setups, this is going to be great, right? Because that approach has not worked well, right? You got to basically stay grounded and not get over the tips of your skis with risk, even though you start to see things that look like that says that we might resolve higher. Take it day by day. Have a great night, everybody. See you tomorrow.